What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the bullish semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So if you like this video, make sure you hit that like button. It really helps the channel grow. Thanks to all those who continue to tune in. If you haven't already, make sure you hit that subscribe and notification bell as well. That way you're alerted to when we release new videos. We do drop bonus content from time to time, so keep your eye out for that. But the nightly and weekend videos, like tonight's video, we focus on identifying triggers and targets for trades, ranging from scalps and intraday trades all the way up to swings and long-term leaps. So if you want a deeper dive into exactly how we set up our charts, make sure you check out that bonus content that we were talking about on our YouTube page. We've got a couple of videos in there that dive deeper into how we set the charts up, the color coding for the different time frames, the broadening formations, levels of interest, things of that nature. So make sure you check that out. And if you want more information about the strat, there's a free PDF in the description of this video that'll help you get started. So I encourage you to watch the full video, because along with the triggers and targets that we point out, we do analyze all time frames and give some pretty good insight. So make sure you stay tuned for the whole video. Let's take a look at the agenda for today. We'll go ahead and recap the price action from Wednesday, December 10th, and then we'll zoom out like we always do to look at the week, month, quarter, and year, make sure we're not locked in on those small time frames and make sure we're getting the full picture. Then we'll zoom back in and set the 4-hour markers and the triggers and targets for Thursday, December 11th, and we'll also go over the triggers and targets for the week, month, quarter, and year. So we'll start things off like we normally do, looking at the 5-minute chart for today's price action. And, as expected, or I guess not as expected, as we guessed, we got basically flat action all day until the Fed rate announcement and Powell's press conference. So we can see on the chart we have the 4-hour markers of the previous high a day here at 48.05. Overnight high was basically right there at 47.99. Overnight low was 47.05, just above that 50% level of 2024, which is this white dashed line. And then the previous low a day was 46.47 down here at the bottom of the chart. A couple other levels of interest are at the top of the chart. This green solid line is last month's high. And we have the week flip here at 47.56. This is what determines whether the week is green or red. This is the first traded price of the first day of the week. So the first traded price on Monday morning, this is that price, 47.56. So as long as we're above it, the week is green. As long as if we're below it, then the week is red. And you can see how price opened basically on the week flip. So it just goes to show how basically flat we've been since the whole week waiting for this rate announcement, right? So the proven strategy that we use, we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. Well, this morning was not a morning to make either choice, right? Number one, the range, previous high a day, previous low day, overnight high, overnight low. It was pretty constrained, right? That we had an inside day yesterday. Well, essentially an inside day yesterday, a day of tight range trading throughout the day yesterday. So we got that this morning, just basically staying in that tight range, waiting for the announcement. And you can see on the announcement of the rate decision, it was a cut which the market wanted. So we had that push up. It pulled back while Powell, waiting for Powell, and when Powell was speaking, pulled back a little bit, but then he obviously started saying what the market wanted to hear, and the market started taking off, and by the time he got done speaking, we had basically what looks like bullish consolidation up here, where this 4-hour broadening formation, this gray this gray diagonal line is a 4-hour broadening formation. So where this 4-hour broadening formation and last month's high basically intersect is where we kind of stalled out today. Of course, we always keep mind of what the previous month's high, 50% level and low, because obviously price stopped in November at this point for a reason, right? Buyers got exhausted. Bears built steam back up to start putting money back in the market. However you want to look at it, there was a reason why price stopped here. So we want to make sure that we're aware of where that level is, in the month following, so that we know where to expect possible, either sideways action or rejection, right? And that's what we got. So not a lot to say here. While the rate in between the release of the rate decision and the beginning of Powell speaking, and then while Powell speaking, you can't really account for much on the charts, right? There's going to be volatility. People or algorithms or whatever are going to be making moves off of, one word or phrases, things of that nature. So, if you played this inside of here today and you made out positive, congratulations on you. We decided to just stay out of the mix, right? We definitely have calls for January and beyond. So no need to, add anything at this particular time until, a direction got decided, right? Once a direction is decided, then we have more evidence to make those choices. So let's go ahead and zoom out a little bit. And one of those things that was decided was the higher low on the day chart, right? So let me bring out a better chart here. Oops, let me get a better one. There we go. So on the day, we can see we had this big push up. We talked about in previous videos how we had this soft higher low here with the 3 or the bullish engulfing candle late November when we started this push up, but we didn't really have a solid higher low. And we were looking at yesterday's as possibly being the higher low, with yesterday being a failed 2 down, being that the 2 down coming from price action in Tuesday. Tuesday's price action went below Monday's price action, which makes it a 2 down. And it's a failed 2 down because although it pushed down, it finished, not only in more of a hammer type of pattern, but green, right? So closed above where price opened, even though price pushed below the previous day's low. And so that's considered basically a failed 2 down or a failed push down. And we were looking for a 2 up today or in Wednesday's price action to lock this 2 down in as a higher low. And that's exactly what we got, right? We pushed up, went 2 up on the day, locking Tuesday in as a higher low and just continuing the uptrend, right? So, an uptrend is defined by highs and higher highs and higher lows, right? So we got a soft higher low here, higher highs, higher high, higher low, and then a higher high. So we are staying in this uptrend on the day perspective, right? Not a lot to draw from the 4-hour chart just because we had that crazy candle in the second half of the day, right? We had a 3 and an engulfing candle, but it was a very small 3 because of how small the price action was on the second 4-hour candle of Tuesday, right? So it wasn't hard to go 3 in that first 4-hour, even with consolidate or a tighter range of trading. So yes, it does set up a possible 3, 2 up, 2 down, but we've got to have a lot of downside action overnight, followed by with more follow through when price opens during the day to really get that 2 down in that first 4-hour of Thursday, December 11th. I'm not saying that can't happen. What I'm saying is we don't get into predictions, but we'll be ready for it if it does trigger. But we do recognize the probabilities that go into that, right? So we've got a long ways to push down. We'd have to have some type of catalyst to push us down. So I want to continue to monitor things overnight and in the morning, make sure that there wasn't that catalyst to start pushing us down and building momentum to the downside. And then once the market opens, continuing to watch and make sure there's no downside catalyst that would trigger that 2 down. Now, if it does trigger a 3, 2 up, 2 down, then obviously we've got a very clear entry and a very clear exit. The exit being at what is now turned into a level of support, which was a level of resistance in the past. But again, that's a long ways ahead of us. We'll get into that in a minute. Just want to continue looking at things, start to zoom out because we're done looking at basically the zoomed in picture. Wasn't a lot going on during the beginning of the day, and then obviously the reaction to the Fed rate decision and Powell's press conference. So from a technical perspective, Not a lot to go off of today. You kind of just had to be in a position to the upside, and then be ready to enter positions to the downside should things trigger. But that's what we had today. From the more zoomed out perspective, let's look at the week here. And obviously 3 weeks ago we put in that higher low, right? And now we're just looking for that higher high, right? We don't want to stall out here, put in a lower high and start moving down, because if that's the case, at best it looks like we might have consolidation and start moving sideways. At worst, we've just set a lower high, and if we push down to make a lower low, now we're turning it into a weekly downtrend. So again, not getting ahead of ourselves there. We're not saying that that's going to happen, but it's something that we want to be aware of. So we just want to go ahead and knock out that higher high here. Not too much further to go. So one would hope that with a little bit of follow through tomorrow, we would go ahead and knock that out. And so that way we can continue this uptrend from the week perspective. It's like really what we were looking at from the month as well, right? We put in, we're very close to locking in a higher low with last month's price action, right? So in November, we obviously had the 2 down, going below the low of October's price, but then this month we pushed right back up. We're almost breached the high of November's price action, and once we do that, that turns this candle into a 2 up and locks this candle in as a higher low. We had this soft higher low off of this April 7th bounce, right, back in August. So we had this April 7 low, the bounce, we had this sideways action, soft higher low right here in the push up. This would be a more solid higher low, being that it's a two down candle and not a 3. It's not an engulfing candle, right? So it gives us a more solid 2 down, and that would lock that in as a solid higher low, and we would be starting a trend in the upward direction on the month, coming from this downtrend in 24 and the beginning of 25, right? That plays into the quarter because we are in the middle of this 1 combo 2 down, combo 2 up strat reversal, right? And if we know the strat, then if that the magnitude of that move is not the high of the 1, but it's the high of the candle to the left of the 1. So that's that 70.08 target that we're looking for. We talked about from the beginning of the quarter when we triggered it. It probably wasn't going to happen in 1 quarter, may not even happen in 2 quarters. So you want to give yourself time if you've got longer contracts. Especially if you've got some strike out there as far as 70, definitely want to give yourself a lot of time to make it to that. But that is the ultimate goal for the move that we're in. Now we do want to watch this because just like on the on the week, if we were to make a lower high on the week and start a downtrend on the week, then we would run the risk of locking this in as a lower high on the quarter, right? If we breach below the low of the 4th quarter of 2025 over here in the 1st quarter of 2026, then that locks this in as a lower high, and that's coming from a lower low. So we're already in, at least in the very least, a broadening formation, but that would start a possible downtrend at that point, right? We've got a lower low followed by a lower high. And then, we wouldn't want to see a lower low after that because it's taking us almost to 0. But, this is a triple leverage product, so that, you can make those movements. But either way, again, not predicting that, but just making sure that we're aware of what's on the table. If we do have price action that starts pushing back to the downside, we do run the risk of making this a lower high. But for the time being, we are in this combo 2 down, combo 2 up, and we're just looking to reach that 70.08 target. All right. And on the year, we talked about how we had the inverse of the quarter, right? We had a 1, 2 up, 2 down trigger at the beginning of the year. Oh my gosh, come on, Thinkorswim. Sorry about that. There we go. We had this 1, 2 up, 2 down trigger at the beginning of 2025 when we breached the low of 2024. We pushed down, didn't reach magnitude, which was a good thing, right? We put in a higher low in this case, so far at least, and hammered up. We flipped back green, and so finishing at the top of this candle again is what we're looking for, so that we have a good chance of going 2 up as soon as possible in 2026 and triggering this 2 down, 2 up, which again has the magnitude of 70.08. So it looks like the magic number for 2026, if we're going to continue this bullish momentum, is 70.08. All-time highs aren't too far after that, 74.21 up here, all-time high. So obviously looking to try and hit those in 2026. You can see this 261.8 fib of this April 7th bull flag that we had. All right, let's go back to the week real quick. If we look at the week, and we look at the bull flag that started on that April 7 low, right down here. Let's make this bigger. There we go. We had the flag pull here. The flag, this was 11 weeks of trading between basically 28 and 24, and then we popped out, right? So far, we've hit the 100 fib extension going to this 132, and we can see that if we're going to breach this 70.08 and go try and hit all-time highs, a good target for us would be the 78.16. So don't want to get too far ahead of ourselves, but we do need to start looking ahead, right? 2025 is basically over. We've put in a higher low on the week, so we've got to start looking, because we already have some January 2028 calls, but if we can start to pile up some more, get a bigger position, then that just makes things a lot easier as we continue to move on into 2026 if we continue this bullish push, right? So just looking ahead, but not getting too far ahead of ourselves. That's what we've got from the zoomed out view. Let's zoom back in here and set up the triggers and targets for Thursday, December 11th. Go ahead and bring the 5-minute chart back up so that we can just start from the scalping perspective like we normally do, right? The major levels here, we have the 4-hour levels, previous high a day, overnight high, overnight low, and previous low a day. Now, obviously, overnight low, overnight high will probably change. So let's just actually activate it, and let's just move it over here. Let's say overnight high, and we'll say is up previous low a day, kind of a double trouble situation there. Activate this, and let's say overnight low gets down as far as last week's high, right? So here's our 4-hour levels, right? Previous high a day, overnight high, overnight low, and previous low a day. Now, the levels of interest that we want to keep in mind out here are the week flip, right? That's what we were basically bounced off of today. It's where price opened up this week. And then last month's high, this green solid line up here at 50.19. We do need to, break above that to trigger the 2 down, 2 up on the month. But again, there's not a lot of magnitude on that move. So seeing that we're bumped up against the this 4-hour broadening formation, as well as this 178.6 fib, we want to make sure that, we've had a great move so far. Market makers expected move. Let's bring up the... Why isn't it on here? Am I in the wrong thing? Oops, not that chart. Where's my market? Oh, I just hadn't scrolled down far enough. Market makers expected move is that 51.30. Yeah, 51.53. So, especially after a big move today, do we have a digest day tomorrow where we kind of digest the move of Wednesday and just slowly creep up? If that's the case, then that 50.61 might be a point where we, either reject and retest as this previous high day and last month's high as a level of support intraday at least. Maybe that's a possibility, or we just move sideways. But if we do get follow through, look for that 51.53 level as an extended target for the day. All right. But anyways, getting back into the scalping perspective, we're looking for those higher lows at or above opening print and lower highs at or below opening print. So let's just say price opens here. We get a pullback overnight, and we get price action that opens here. If price opens and pushes up, and we, maybe we hit this fib extension, or maybe even push up to overnight high and pull back down, and we make a higher low at or above this opening print level, then you want to look to get into calls, right? Get into the calls, looking for your first target of overnight high, second target previous high a day. In this case, they're basically the same level. So maybe you want to unload, 3/4 of your position there instead of half. That might be the case, and then leave some runners to see if we continue to push up. But from the repeatable strategy perspective, we're just looking for higher lows at or above opening print to get into calls, looking for overnight high and previous high a day. On the flip side of the coin, if we open and we push down, maybe we bounce off of last week's high and we push back up, but then we get some lower high at or below opening print, and we will want to look to get into puts. First target would be overnight low. Obviously, if the overnight low is here tomorrow, that's not going to give you much magnitude, even if you get a perfect entry. So probably not going to let anything go there, but definitely looking to let things go here at previous low a day, especially if they're starting to slow up as we go through these levels of support. Last week's high, the week flip, and previous low a day. Maybe we come back to test last year's 50% again, and that's where we bounce. But quite a few levels of support that we could bounce from, even if we do get a pullback tomorrow. So there is still a possibility to the downside. Don't think that all the rate decisions out and whatnot, so we're just going up from here. We could have a day where people sell and take profits, or like I said, just digest. So there's still opportunity to look for downside, right? If we look from more of a day trade perspective, a longer day trade, maybe even overnight swing, we want to look at this 4-hour chart. And again, we talked about how we went 3-2 up. So the possibility for the 3-2 up, 2 down is on the board. Again, we've got to retrace a lot of that. So don't know that that's going to happen. But if it does, obviously it triggers at the low of Wednesday. And the magnitude for that move is the low of Tuesday, right? So not a lot of magnitude there. A lot of support around here. Last week's high. Again, previous low a day. Last year's 50% level. Right, if you look to the left, that last year's 50% level is very much a level of interest because it was resistance, 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 then support, support, resistance, resistance, a little bit of resistance, resistance. Now it's looking like it's turning into support. So if we do get that pullback, look for another bounce off of there. And if we're not able to bounce off of there, then obviously it's showing its strength as a point of resistance. And, we're going to look to fill this gap, maybe even go by the end of the week and retest last week's 50% level. All right. From the, for the upside, again, we talked about how we do have some levels of resistance here. We've got this 4-hour broadening formation, these daily broadening formations. The market makers don't expect the price to go much higher than this either. So, temper your expectations for further push up. We have made a decent push for the week, and a decent push for the week, going off of like the events that were going on this week, right? Knowing that we were going to have people probably holding their breath until the rate announcement. So for what we've had, it's been a nice little pop here, and we've gone 2 up, and just look how close we are to making that higher high on the week, right? So got more upside to us, but temper your expectations. From the day perspective, then we could just have a 2 up continuation, right? Oops. Looking to take out this higher high on the day, and then this higher high as well, which would also take out the higher high on the week. So definitely looking for price action to reach here, and then finally up to that 51.91, which is that 138.2 fib extension of the April 7th bull flag that we talked about earlier, right? Again, from what's this, 50.09 to 51.91, that's basically a $2 move, which is a pretty big move. Today you can see we only moved $1.86. So again, temper expectations of going much further than 51.91, even if we have another explosive day. All right, let's go back to the notes here. Now that we've zoomed in, let's take a look at the important information here, right? So this is December 11th. There will be 13 trading days left in 2025 on Thursday. The close price on Wednesday was 48.98, and then we know what it takes, what price has to do in order to flip the week red, the month red, the quarter red, and the year red, right? For as of right now, it's full time frame continuity to the upside. All of the week, month, quarter are green, but we do need to know what levels would flip those red, because we're not too far off from the week flip. We know that the market maker's expected move for the week is plus or minus $5.03, giving us a range of 51.53 to 41.47. And then, of course, we always keep in mind where our gaps above and our gaps below are. We talked about from a scalping perspective, we're looking for higher lows at or above opening print to get into calls, and we're looking for lower highs at or below opening print to get into puts. From the 4-hour perspective, we showed on the chart how there is opportunity for downside, and that would give us a 3-2 up, 2 down reversal strat, giving us a very clear entry, which is the trigger 47.68, and a very clear exit, which is the magnitude of 47.01. Not a whole lot of magnitude there to get, but if you tag it right, you could make some decent profit. If you're getting multiple contracts in the money, maybe just right at the money, and you nail your entries and exits, make some good money there. But we've got some extended targets out here for you as well if we start to build some momentum. That 46.10 is the close of that gap, so maybe that's what's in store for tomorrow if we really build some momentum. To the upside, we would have a 2 up continuation triggering at 50.09, and we've got some targets out here of 50.61 and 51.53. That would roll us into the day. Now again, if we go to the downside, if we triggered that 3-2 up, 2 down, and we reach that magnitude of 4701, that would trigger a 2 up, 2 down. At 4701 would be the trigger, the magnitude being 4647, and then we have extended targets here of 4610, which is that gap close that we talked about earlier, and then 4554. To the upside, it would just give us another 2 up continuation, triggering at 5009. And we've got our targets out here, 5153, 5257, and 5295. That 5295 would be a higher high on the day. Past, let's see, 5019 was last week's, it was the last week, sorry, not last week's high. Last month's high. So that would trigger that 2 up on the week and month as well if we were to go make this higher high on the day. On the week, we have triggered and we are still in force on this 2 up, which then, once we reach 5019, we'll trigger a combo 2 up combo. I'm sorry, let me start over. We are in a 2 up, but if we reach this magnitude of 5019, that then triggers a combo 2 down, combo 2 up. So we do, again, this 5019 is the last month's high, so looking to break above that because it's a simultaneous break is what it's called when you're breaking or you're triggering on multiple time frames at one time. So again, that 5019 will give us the higher high on the week, a 2 up on the month, and continue the 1 combo 2 up combo. I'm sorry, 1 combo 2 down, combo 2 up on the quarter. All right, so just looking to continue. We've got our extended targets here on the month. We're still inside, almost so close to triggering that 2 up that we've been talking about. 2 down, 2 up, giving us a magnitude of 5076. So not a lot on the move, but it does lock us in, lock last month in as a higher low, and trying to start the uptrend, right? So looking for at least 5076, hopefully by the end of this week. But we do have another couple weeks of trading left in the month. And then on the quarter, we talked about the 1 combo 2 up, 1 combo 2 down, combo 2 up that we have triggered. Looking for a magnitude of 7008, but we've got our intermediate targets there on the way up, just because it's going to take more than a month to get there. So depending on how you want to scale in and scale out at these levels is up to you, but we've got these listed out there for you as important levels of interest. And then on the year, again, we've reversed that 2 down, made it a nice solid hammer candle, green hammer candle, looking to finish at the highs for the year, looking to get that 2 up next year, triggering the 2 down, 2 up, which again would look for that 7008 target. So there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. Hope everybody enjoyed it. We tried to cram in as much information as we could without taking up too much of your time. So, we would appreciate a thumbs up if you did make it this far and enjoyed the video. Definitely leave us a comment if you have something on your mind. We love interacting with you guys, but we'll go ahead and end the video here and do it like we always do. If you're watching this Wednesday night, we hope you get some good rest tonight and wake up refreshed tomorrow. If you're watching this Thursday morning, we hope you got some good rest last night and feeling nice and refreshed today, and we look forward to getting out there and trading with you.